In the early 1950s, Warren Buffett was just starting his career in investment. He had attended Columbia Business School and had worked for a few years as a securities analyst for Graham Newman Corp., where he learned the value investing philosophy from Benjamin Graham, the father of value investing. Buffett was looking for investment opportunities in the stock market, and he came across Berkshire Hathaway. Welcome back, rich followers. We hope this video inspires you to get started on your dream. So please watch until the end. And if you are new here, consider subscribing so that you won't miss other educational videos like this. Let's get started. Berkshire Hathaway was a textile company that had been in business since the 19th century. It had factories in New Bedford, Massachusetts, and other locations in the US. The company was struggling to compete with cheaper imports from Asia, and its stock price had been declining for years. Buffett saw an opportunity to buy the company's stock at a low price and turn it around. In 1962, Buffett bought $7.5 million worth of Berkshire Hathaway stock, representing a 5% ownership in the company. He believed that the company was undervalued and had potential for growth, but he was not happy with the management. Buffett thought that the management was not making the necessary changes to improve the company's profitability, and he wanted to take control. Buffett began buying more shares of Berkshire Hathaway, hoping to gain enough ownership to force a change in the management. However, the management was resistant to his efforts. They did not want to give up control, and they did not believe that Buffett's vision for the company was viable. As Buffett's ownership in Berkshire Hathaway grew, he became more vocal in his criticism of the management. He wrote letters to shareholders and the management, explaining his ideas for improving the company's profitability. He tried to persuade other shareholders to vote with him to replace the management, but he was unsuccessful. In 1963, the management of Berkshire Hathaway made a deal with another textile company, the Associated Cotton Textile Company, to merge their operations. Buffett saw this as a threat to his efforts to gain control of the company. He sued the management and the Associated Cotton Textile Company, alleging that they had misled him about the merger and that it would harm the interests of Berkshire Hathaway shareholders. The lawsuit dragged on for months, but ultimately, Buffett lost the case. He had spent a lot of time and money on the lawsuit, and he had not gained control of the company. However, he was not ready to give up yet. He had another plan. Buffett began purchasing shares in the company's parent company, the Berkshire Hathaway Incorporated, which had holdings in several other textile companies. He hoped that by gaining control of the parent company, he could then gain control of Berkshire Hathaway. He kept buying shares, even though the parent company's stock price was much higher than Berkshire Hathaway's. Buffett's plan worked. In 1964, he gained control of the parent company and, therefore, gained control of Berkshire Hathaway. He became the chairman of the board and the CEO of the company. However, he soon realized that the textile industry was not the future, and he began to transition the company into an investment firm. Buffett's timing could not have been better. The 1960s were a time of great change in the investment world. The traditional, value investing approach, which Buffett had mastered, was becoming less popular, and a new approach called growth investing was emerging. Buffett saw the potential in growth investing and began to move Berkshire Hathaway in that direction. Over the years, Buffett made several successful investments, including buying shares in companies such as Coca-Cola, American Express, and Wells Fargo. He also acquired several other companies, including Geico and Burlington Northern Santa Fe. Buffett's investments turned Berkshire Hathaway into a diversified holding company with a wide range of businesses, from insurance to energy to consumer goods. Buffett's investment style was based on his belief in buying good companies at a fair price and holding them for the long term. He was not interested in short-term gains or speculating on the market. He was focused on finding companies with strong fundamentals and a competitive advantage that could generate steady profits over time. Buffett's approach to investing proved to be highly successful. Under his leadership, Berkshire Hathaway stock price grew from $19 per share in 1965 to over $400,000 per share in 2021. This made Buffett one of the richest people in the world, with a net worth of over $100 billion. Today, Berkshire Hathaway is one of the largest and most successful investment firms in the world. Its portfolio includes some of the most well-known brands in the world, including Apple, Amazon, and Bank of America. The company also owns a number of smaller businesses in a variety of industries, such as furniture, jewelry, and candy. But perhaps the most remarkable thing about Warren Buffett's acquisition of Berkshire Hathaway is the lesson it teaches us about perseverance and strategic thinking. Buffett could have given up when he was unable to gain control of the company through traditional means. He could have sold his shares and moved on to other investments. Instead, he found a different path to success. He was not afraid to take risks, and he had the foresight to see the potential in an industry that was undergoing significant change. As Buffett himself has said, in the business world, the rearview mirror is always clearer than the windshield. His acquisition of Berkshire Hathaway is a testament to his ability to see what others couldn't and to take advantage of an opportunity when it presented itself. The story of how Warren Buffett acquired Berkshire Hathaway is a fascinating one, full of twists and turns, unexpected alliances, and a bit of luck. It is a story of determination, vision, and the power of a great investment strategy. It is a story that will continue to inspire investors and business leaders for generations to come. If you found value in this video, we would like to give you another video for you to enjoy next. Please like this video and share it with your friends on social media. Don't forget to subscribe if you are new here, so you won't miss another one of our videos. The more you learn, the more you earn.